Hey traders, it's Christopher Mullen from the technicaltraders.com. I'm going to talk about gold, the US dollar, and miners, and what is setting up on the charts, what's set up on the charts, and how to kind of take advantage of it going forward. Now, this was an article I posted back in December of 2019, and we are showing here what the overall gold futures were doing on the monthly chart. Now, we played a breakout of this multi-year staging formation. We ended up playing this breakout, and then this article was talking about this is a beautiful bull flag. The market is in bull mode, which means new bull markets usually last many years. And you can see what happened when it broke out of a previous base. You go into a multi-year rally, and really pauses and pullbacks in a bull market can be bought. And that's what we saw. And if we were to compare that to where gold is now, we'd had an upside target based at 1746. Kind of hard to see there. If we go to the current price action of gold now, you can see we had the rally, the bull flag, and we came up and we've been trading at this 1750, 1746 for 3 months already. And this is it's a Fibonacci measured move. It's actually been on relatively light volume, which is what you want to see. You want to see a light volume pause for price. So all it is people kind of rotating between the buyers and sellers, and it's just kind of people taking profits, new people getting in. Very bullish formation, and this shows we do have an upside target of 2,000 once it does break this pattern. If we were to quickly look at the daily chart, you can get a view of this bull flag. Now we had the coronavirus forced liquidation event that created a big V-shaped recovery, but more or less we saw a strong rally. It's been flagging out, holding its ground, and it's testing this breakout zone again. It has a little bit more work to do. I would really say a breakout will be above 1789, somewhere in there, but it is holding up and looks very strong. It has a nice bull flag over the last 3 weeks alone and could be starting to move up to this breakout zone. Let's go back and take a look at what the US dollar has been doing. Again, the monthly chart, big long-term views of where price is. We've got more or less a topping resistance phase for the dollar. We've got a bottom kind of support zone for the dollar, huge ranges, obviously. But we're expecting this. This was several months ago, 7 months ago. We're expecting the dollar to more or less not just crater, but to at least start to move down. And this move could take several months. And if we take a look at the UUP ETF, which mimics the US dollar, same chart, you can see here we have pulled back. It did push up. We had that big kind of whipsaw in the market with coronavirus, but more or less it is still trading in this range of 27 and change and kind of fading down to the middle area here. Now we are anticipating this to continue to move down, and as the dollar does start to slide and fall, that it could be a huge catalyst eventually for precious metals to rocket higher. So we're in this topping phase, high value for the dollar. The printing going on should eventually catch up, which I think it already is. We've already seen 3 months of lower prices for the dollar. If the amount that they are printing, the stimulus, definitely bearish on the dollar, bullish on metals. So that's where we see the US dollar going. Now keep in mind, if the stock market does crash, we do tend to see the dollar hold up or rally during bear markets. We saw that back over here when the bear market happened. Money piles into the dollar. We had a lot of weakness in 2014, 15, 16, fear in the markets, and of course the dollar held up. And that's because it is the safe haven of currencies. It's the global reserve. So this, I do anticipate the dollar likely to hold up and potentially push back to the upper end of these levels if we enter a bear market in stocks. But eventually, when that comes to an end, just like what we've seen in the other bear markets, is once it comes to an end, the dollar collapses, everyone moves to stocks and equities and different asset classes, and we see the dollar head back down because they're not worried currency-wise so much anymore. They're looking for opportunities elsewhere. Now let's take a look over at the gold miners. This is the large caps, the GDXJ. It's been forming this multi-year base as well, trying to get out of here. We talked about when it starts to break out, we should start a multi-year rally. We should see something fairly significant. So let's go and take a look at where we are 7 months later. Let's go to GDX. It's up 3.3% today. Again, monthly chart. Here's the multi-year basing formation. It has broken out of that pattern. It is holding up. This is the sign that it is starting a new bull market. And obviously there's a lot of upside potential if metals start to break out and the miners become start to become a safe haven play during this point. Now, keep in mind there will be some risk here. If the stock market starts a bear market and collapses, we could very easily see gold miners get pulled, trade sideways or get pulled down with them. So it is still a bit of a trader's market here until we either start a new bull market in stocks, and that means we'll probably see these continue to rip to the upside. But if we start a bear market in the equities, like the SP 500, NASDAQ, Dow, Russell, is likely going to get pulled back and trade through this range. So probably this high down to this low, it could very easily trade through here. I think they will hold up fairly well. I think a lot of leverage was taken out of the market during the COVID crash. A lot of deleveraging kind of got fixed, but could be still threatened and trade sideways and lower for a little while until we get to the late stages of a bear market. So when the bear market's about to end, we usually see gold miners start to bottom 3, 4, 5 months before that, and that's when we see them rocket higher. I mean, the bear market kind of ended over here in March of 2019, and more or less 4 or 5 months earlier, gold miners become the major leaders and take off. So there is that threat that they may shoot up short term, but when a bear market starts, expect them to pull back, maybe test this level, depending where things go. But we'll update on that as the markets unfold. And last but not least, we just published a day or so ago our final article on gold has finally cleared major resistance, time for liftoff. So you can go to the page there. We'll have a link in the description, but we talk about the new fib arcs, resistance levels being broken on gold, and really how it's on the cusp of exploding to the upside, short-term, longer-term targets going forward. So you can take a look at these charts and get an update on where we are in the current market cycle for precious metals. Anyways, hope that helps. Take care. Bye-bye.